Hi, welcome back. Good evening, guys. It's another Thursday. That means another not so late night show by KayaPlus. And today we are still going to talk about one of the listed companies in the Malaysia Stock Exchange. You probably would have recognized the company, or you have actually some sort of affiliations. You know, this company is affiliated to one of the more well-known companies in Malaysia. It's actually one of the subsidiaries of the Petronas group. But today we are going to just look deeper into one of the branches, the subsidiaries, which is Petronas Gas Berhad. So we'll talk about what the company is about, what business model it's doing, and does it actually qualifies to be a dividend stock or not, since we are going to reopen Dividend Gems. So of course, what more better than to actually pick a potential dividend stock and talk about it. And of course, you can also share your thoughts and opinions with us. We can have a healthy discussion after the entire sharing, and we will also divulge a bit our dividend gem methodology to see whether it is actually a potential dividend stock or not. Right. But Jubing, what are your initial opinions when studying about the stock?
I think of course it's not a very difficult stocks because it's something that you need to use on a daily basis. But then it's how this guy managed to go through the business model and then have a very strong unfair advantage. And later we will share all these things.
All right. So I guess we can proceed. So as noted just now, we will be reopening Dividend Gems on the 12th and 13th of June. So if you are interested into, picking up the right methodology to sieve out a potential dividend stock, Dividend Gems is something you would want to consider. It will be a 2-day event. 12th and 13th of June 2021, 10 a.m. to 4 p.m. will be on a weekend. The price is 488 per pax. And of course, what do you have inside is actually 3 sets of criteria to gauge and analyze normal companies, bank and insurance companies, and also REITs as well. So of course, 3 of these companies are more the well-known companies that have the potential and capabilities to pay out dividends, but they operate the business in a slightly different manner. Hence, we have to look at different metrics and criteria to screen through them, right? So of course, that's covering the special metrics and the KPIs for certain industries and companies. Of course, when you pay a one-time for 488, in the event Dividend Gems undergoes a bit of upgrade, we have decided to add in more important criteria and hurdles. Rest assured that all of these upgrades come for free of time. We are not going to pay you charge you a surcharge for additional updates on the cost. And of course, you will have access to the materials and the video replays and unlimited playbacks for your revision. So it's not take it, leave it, but it's always an ongoing kind of support and upgrade and refresher cost once you subscribe to Dividend Gems, just a one-time payment, right? And for those who are more excited on getting more from KayaPlus, we do have a special KayaPlus Premium Club. So what you do is actually it's going to be a subscription model. So you get access to a private Facebook group, and then we do monthly private sharings. And then of course, Subplus 2022 will be one of the components of that. And of course, there will also be premium articles and premium investing analysis. Last but not least, if you are joining from Dividend Gems into Premium Club, every month we also furnish you with a specialized Dividend Gems report. And last but not least, we also have thematic events and thematic topics to talk about. So this is actually what we talked about last week, which is what if investing is just like a game of chess and you have to really see through everything before you make your move, right? So we talk about that. And of course, we also talk about my real life experience investing back then 1 year ago when the stock market tanked, how I actually went through the entire process of buying, holding, even though the market was very pessimistic. Markets were low, portfolio was red. But fast forward 1 year as of today, what actually has happened? The post-mortem, the entire process from seeing my portfolio into red and into the green it is, I guess, today. So we've talked about that. And of course, for those who from Dividend Gems, you would have received our Dividend Gems from Bursa Malaysia Berhad. Inside there, we actually screen through Bursa Malaysia with our Dividend Gems methodology to see whether it is a good dividend stock or not. And of course, coming up also will be Semiconductor Sphere, one of the upcoming titles for our thematic transcripts. So previously we talked about EV ecosystems in April. So those who are actually the Premium Club member, you can actually replay the entire video, the entire sharing unlimited times. Of course, feel free to ask questions. And this is a preview of what we are going to cover. So basically, we'll go through the end-to-end process from design all the way to the end consumer. Of course, in the middle part, you have your midstream players, your foundries, your OSAT players, and also your EMS players as well. So we're going to talk about all of that and then try to pick potential, the best sector or best company with the best moat to actually get a little bit of exposure of semiconductor into your portfolio. Right, so you're going to talk about many companies from the integrated device manufacturers, from the fabless to the pure play foundries, and also to the assembly, package, and test companies, which a lot of that you can see a lot of Malaysian companies over there. So we also talk about that as well. And here you have it. If you are interested to join Semiconductor Sphere, the date will be on the 24th of July, 10 a.m. It will be a one-day event. You can actually sign up as the event as it is, or you can actually join our premium club to get the access for free. And of course, this was the previous coverage for EV. We talk about lithium companies, big battery companies. We also talk about the automaker components company, and we also talk about the electric vehicle manufacturers themselves, which you can see over there. So of course, thank you for the going through the offerings and services that we are actually currently having. And of course, back to the main topic, which is pet gas. So of course, the usual disclaimer, what we are going to share to you today is just for sharing purposes. Do not take it as an investment advice. Do your due diligence before you buy, sell, or even hold whatever company that we are mentioning as of today, right? So I will pass it to Chun Beng. Before we actually go to what pet gas is, let's just touch base back. What is actually natural gas?
Yep. So I think a little bit of science to bring you through what this company is all about. So basically, they are actually in the hydrocarbon gas. And then if you are a chemical student, probably you heard of this term called methanes. But if you're not, then basically they are actually hide under the soil down there, and then you can actually pull it out and you can turn it out as a fuel to power up a lot of things. For example, can be for vehicles, can be for cooking oils and so on. But of course, I think the one that we're covering today, the main application or utilities that goes to you and me is the cooking gas.
And also power generation, some of the power generation as well.
I think this one I need to pass to Jupan to cover the entire process, and then which Petronas gas is actually inside.
So if you talk about natural gas, in a way, it is quite similar to crude oil. Basically, you have the upstream players actually doing the exploration, and once they found or actually discover a natural gas reserve, then they will actually set up the rig and whatsoever, and then they can extract whatever is down there, be it petroleum or natural gas, and then pull it out. But for crude oil, it's quite simple. Basically, you pull out the crude oil as it is, and then after that, it will just get transported to the mainland, to the terminals where the so-called refining process happens, right? But when you actually extract natural gas, it exists normally as a gas, right? So how do you actually transport gas from somewhere in the middle of the ocean back to your refining terminal, which is at the land. So you cannot be transporting gas from point A to point B. So you always need to have a mechanism to actually condensate the gas into liquid, so that you actually have more capacity to transport more volumes of gas from the extraction point to your refining process. So of course, there will be a lot of supporting players, the service providers in the midstream. Once the upstream players actually pull out extract the crude natural gas, it will actually gets converted to LNG, liquefied natural gas. And then it will go to all kinds of processes and also refining to actually become one of the end product where it's actually used for retail market, the cooking gas that we get, or it can actually goes to the home market as well. So it can go to the power generating companies, and they also go to sometimes the big manufacturing facilities that also requires the use of natural gas. So we're visiting Boyle's law. So for those who have actually learned chemistry during their middle school. So straightforward, if you want to actually decrease the volume of gas so that you can pack more gas and transport it more efficiently, so you need to actually pressurize it so that it can becomes a condensate, becomes a liquid, so that you can actually pull and transport more volume of gas to point A to point B, so that it becomes more efficient as well. From business point of view, it's more straightforward and it's more cost effective. So there you have it. When natural gas is extracted upwards to the surface, it actually condensates into liquid natural gas, and then transported in such kinds of carriers from the extraction point to the mainland terminal where it gets refined. So I will pass back to Chun Beng to talk about the company itself.
Yep. So this company, by the name itself, it's actually related to Petronas, and then it is actually listed in the main market of Bursa back in 1995. Long history, and then until now, about 60% is still owned by Petronas, and the rest is owned by all the institution or retail investor like me and you. They are, the leading guys that actually do all these gas infrastructure and utilities, from the processing down to transmission and down to regasifications. So once all this is being processed, they also go down to some other thing that is out of gas, which is they also supply steam, power, industry gases for the east coast of Malaysia. Some of the industry guys actually subscribe the service from them. So this is some key introduction about Petronas Gas Berhad. And then the next slide actually are telling you what is their key business pillar. So basically, they do technically end-to-end. So they started off from the processing of the gas. So it's on the very upstream where they go up, set up the station offshore, and then extract and process the gas. They have actually 6 plants that is nearby the state of Terengganu. So once they extracted or processed the gas, the next thing they do is actually transfer it out. So the second pillar, the business pillar they have is actually the gas transportation. So they actually run or occupy a 2006 km gas pipeline network. They call it the PGU. So across the peninsula Malaysia. And then it's actually operated by their gas transmission and regasifications division in Segamat. So this is the 2 things on the mid to upstream. And then the next 2 business pillar is actually once they have grabbed out the natural gas. So what they do is they convert them into so they convert this thing, the LNG, into the natural gas at atmosphere temperatures, like what the atmosphere that we're living in right now. And then they have an offshore LNG regasification terminals in Malacca and also in Johor. So this is all the processing part. And then these 3 one is done, they go into the utilities, how you actually utilize the processed gas and then turn into power. So they are selling some of the electricities, steams, industry gases, and so on. So this is the four key thing done by Petronas Gas Berhad. And then the next one actually give you an overview, similar to what Jupan has shared on the overview of the natural gas. But then this is what happening inside Petronas Gas Berhad. And then you can see you go from the upstream. The top part is actually telling you they do the gas processing part. This top part. And then how it got connected through the gas pipeline network, which is actually occupied by their gas transportation and so on. So this is the entire business activity and the processes, but I won't go through in details. You can actually find this high-res image in their website as well. But this is basically how each of their business unit work and how they integrate with each other and how them actually grab it from the natural form and then eventually turn into something that can be used by me and you. So the next one is they are technically in somewhat similar position like Telecom Malaysia, kind of in the monopoly states. So there is also some of the requests by the government to actually open up their production or their pipeline, all those things to the third parties. So they are actually actively working on that. I will see this as a positive move from me as a user of their service. But then whether it's good or bad to their business, we will actually talk about it when we cover the entire financial performance. So this is what is actually covered. And then some of the regasification site that we have mentioned in Malacca and also Johor. And then some of the thing, they actually pull the thing offshore from Terengganu. So this is how it all connected. And then the next one is some of their key stats. So their current utilities capacities is they are able to generate up to 541 megawatts of electricity. Not a lot because Malaysia still have different type of a way to actually generate the power electricities. So they also have some capacity to actually do the steams and so on. So these are some of the capacities that you can see it or get it from their annual reports. This is the latest stats. And then I purposely pull this out because there has been a lot of highlight of this word called 30, 1Q, and 99. So this basically what they wanted to achieve. As you can see, this is their main target to actually achieve. So 30 represent they wanted to actually reduce the asset utilization gap by 30%. So now they got like let's say 100% of the asset, and then it's not fully utilized. So their target is actually to reduce the gap so that they can fully utilize the asset. So some of the things they have put in into some action to actually closing the gap. And then, of course, the second one is, I don't know why they call it 1Q, but basically they just wanted to make sure they are able to achieve the top quartile performance set inside their targets in terms of the energy and cost efficiencies. And then the last one is to achieve 99% of their asset reliabilities, meaning it's always up and running. And this is very important because they are the one that pull the thing and then process it. It need to be as high as possible so that they don't go into some losses. So this is some of the target or framework they are following and try to achieve. And they has been running it, and then they have a few plan laying out even up to 2023. So now we'll go into some key highlights. So this is some of the number that actually show to you broken into their key business pillar. You see the revenue actually going into gas processing. It didn't really gone a lot of difference, but then it come with some slight improvement in terms of gross profit. One of the key reason is also they have a new revenue stream from this Tanjung Sulong export terminus in Terengganu, and then some operational improvement. And then the second one is the transportation, kind of similar, and then including the gross profit also about the same. So, but the next one is something that you will see a big, slightly bigger difference in terms of revenue, and it followed by the profit as well. But then this is something that you need to take note if you wanted to actually check out their actual performance, because there is some sort of pass-through cost and then recognized as revenue. So what does it mean is when they do roll out this thing, let's say you got 100 million cost, which is supposed to be borne by a third party. In this case, borne by the shipper. They actually recognize it as a revenue. So you can see the revenue actually go up. If you compare year by year, usually it's quite stable. But 2020, it grew up quite a lot. Is because the cost, the pass-through cost actually recognized as revenue. So meaning you have 100 in, let's say you see this one, 1283 versus 1400, it can be 100 out of it is actually a pass-through cost. And then it didn't actually help to pull out the profit. And then lastly, it's something to do with the utilities. So there's slight drop in the revenue due to lower access during the pandemic periods, because it's a 2020 financial year's performance. But the profit actually doing better due to some of the contribution from the steam and industry gas sales in Terengganu. So this is the 4 key business pillar by Petronas Gas. The next one actually give you a breakdown. So I pass to Jupan to share how are they doing and what is the proportion that is happening to them, and then how the profit actually make a difference.
Yeah. So I think Petronas Gas just actually just finished their fiscal year 2020, and if you look through their 4 pillars, actually 4 pillars are pretty much stable and equal lah. If you look at from the revenue point of view, right? So gas processing is around 1.7 billion, gas transportation is around 1.2 billion, regasification 1.4, and utilities around 1.3. So straightforward, you say all 4 segments are actually quite strong in terms of a revenue contributor. So if you want to break it down to percentage wise, yeah, you see quite evenly distributed. 31% for gas processing, for gas transportation is 21%, for the regasification 25%, and for the utilities, your electricity, your gas, your oxygen, blah blah blah, all the minuscule supporting services comes to around 23%. But that doesn't mean that the profits also is equally contributing by all 4 pillars as well. If you dig deeper into the segmental results, you'll notice that the key profit generator of the business is actually gas processing, as we saw just now in the gross profit breakdown. So if your gross profit of a particular segment or pillar is strong, and of course the operating efficiency is there, then you will see naturally that this pillar or this segment will be a very important part, plays an important part into determining whether the company is going to grow, is going to stay flat, or is going to, encounter some kind of weaknesses in the upcoming quarters. So from here, you can straightforward see that yes, 4 good revenue generating pillars, but the ones that you should actually take note of and drill deeper and to actually keep more attention to is the gas processing side, transportation side, and also the regasification. So that is one of the so-called, because they already have a network of all the entire end-to-end stream, from processing side, transportation, and also to the regasification. So they already have the kind of infrastructure available, so they are able to very seamlessly extract it, transport it, and process it, and then all the kind of supplementary services so that it gets passed through the end-stream players or end-stream parties to actually sell it to the manufacturing companies, or even you and me, to actually ensure that we have gas to cook at home, right? So do take note that the profits does not stay the same for the four pillars, but it's really, really heavily reliant on the gas processing, transportation, and regasification processes. And if you look at the historical income statement, you will see that it is a slowly inching up, slow growth kind of company. And if you see that even 2020, last year, a lot of companies suffered some kind of setbacks from the pandemic. This was a company that was relatively strong and stable. So despite the pandemic, earnings have been protected by long-term agreements with Petronas. So being one of the subsidiaries of Petronas Group means that there is some form of inter-party kind of arrangement and contracting services that Petronas Gas is able to dish out to Petronas Group or other groups, other companies within the group. So in this scenario, it will be the gas transportation and also the regasification business. So, and also, if you look back, even though it has been quite stable for the past few years, 30+% of net profit margin, a slowly increasing revenue, and also a slowly increasing net profit. Of course, it caught my mind that previously in the year 2013, net profit margin was at 53. So why has it came down, right? And why has it came down so much in 2014? From 53% to 42%. So once you dig deeper, you'll notice that during that particular fiscal year 2014, there was a recognition of the deferred tax assets. So due to the investment tax allowance. So that was the time where Petronas Gas actually invested into setting up the regasification terminal in Sungai Una and also the Kimanis power plant. So once you actually set up a plant, you do some kind of investments, then you are actually going to apply for some kind of investment tax allowance from the government. So once granted, then you have to recognize it as a kind of a staggered kind of cost along the year. So that is where it actually comes to play and actually bring down the net profit of Petronas Gas. But if you just ignore that deferred tax asset, is actually on a healthy kind of growth for the company. And of course, going to the capital structure, the balance sheet of the company, relatively stable in terms of the asset proportion, and also the liabilities part of it is also quite stable. And if you notice that that is quite stable as well, from 2.9 billion going up to 3.7 billion, and then in fiscal year 2020, it just came down a bit again. So if you look even at the patterns for the past 4 years, it has been quite stable with no major shifts in terms of their debt profile or even the gearing ratio as well, not a very significant one. And last but not least, if you look at the historical cash flow, you can see that this company, although very, very slow in growing the business, but on a year-to-year basis, you can actually see some kind of growth from the cash flow from the operating activities. And of course, it also does do a little bit of capex here and there during the years, and also some years where it is if it is a particularly good year, you can expect the companies also to pay out some dividends that are trending with the company's performance as well. So in the 2020, there was a special dividend payout. Hence, you can see that the cash flow from financing activities actually is much more significant compared to the previous years. And looking at the historical dividend payout, it all ties back. So you can see in fiscal year 2020, there was a special dividend payout. So the entire dividend payout for Petronas Gas in fiscal year 20 amounts to 137 cents or 1 ringgit and 27 cents. So it has been on an increasing trend. So it does look good from this kind of perspective. And it also has a dividend payout policy ratio of 50% of its earnings. So I'll pass back to Chun Beng. Things do look a bit okay for Petronas Gas. stably growing, quite regulated as well, and quite generous in their dividend payment scheme as well. So what are the potential future outlooks and prospects for Petronas gas?
Yep. So I think that there are a few things. So of course, it's protected by Petronas. A lot of it is actually will be purchased or have the booking or order upfront by Petronas. That's why back in 2020, they are close to or very minimum impact by pandemics because those order is already confirmed. And of course, as part of this, there is the new tariff. After so many, I mean, a few months or a few years of uncertainty, it finally locked down a higher tariff, meaning it's a higher price to me and you as a consumer to actually use this cooking gas. This thing is going to be a fixed higher tariff until 2023 or longer. So this is actually helping them to be expecting more sales coming from it. But then on the other word, it's also a regulated business, meaning if they didn't manage the business well, the cost is increasing, all those things, they also cannot demand for more. It's all market driven. Even though there are a lot of demand, they hit into some big issue, they still need to stick with this tariff. But of course, on short term, you can actually be certain if you're investing in this company, the number will be quite certain in the coming years, including some of the regasifications facilities has been fully booked as well. So it's sort of something that you can already predict. But on the other hand, it can be also means that some of the things is already factored into the price. People already know it will happen, and then it probably can't give you any surprise. People won't actually go invest into it and push up the price because it's so stable. Then probably you shouldn't aim for the price movement for short-term trading. It's hard. Of course, you see the share price is going up and down, but then from the business alone, it's kind of stable and predictable, which make this stock less attractive if you are people who like to see a company keep on growing, acquiring company for bigger visions. Then this one might not be the company you should be targeting. So. Then the next one actually give you some risks that highlighted by me just now. First is the tariff not controlled by them. It's regulated, meaning they also subject to the government to say yes, you can increase price due to whatever reason. The whole inflation has been going on, more cost to manage this, but it's not controlled by them. It's not market driven. And then the next one is they are the one going to open up for third-party access. Think of it like in TM, they own all the backhaul of the fiber network in Malaysia, and then they lease it out to Maxis to sell, and then they go into price war. It will seem something like this, but then it's not happening yet because they just open up this thing, and then they are looking for people to actually grab their facility and then sell the things out, like what Maxis did for their Maxis fiber. But in fact, they are actually riding on TM backbone. So something that's going to happen is some of the risk to them in terms of the margin. But then you think of it like what we mentioned, there is a few business pillar. Some of it is giving you a lot of margin, but you only will hit one thing, one of the pillar, which is the utilities part. And then here, the next one summarize some of the valuation numbers, which is giving you about a 15 PE, slightly higher than most of the bank, if I'm not wrong. And then the one that actually you should take note is they are quite generous with their dividend payout. At least 50% of their earning will be going to your pockets if you invest into them. And they even give special dividends this year. But I will pass to Jupan to add on some of the other information.
I think for an infrastructure company, you might say that It's in a way predictable. If the tariff is fixed, then yes, the only way for them to grow is actually in terms of volume. So you actually manage to process, transport more volume of natural gas, then that will actually be the growth part lah. But as far as I know, natural gas is not something you can easily or readily export all around the world. It actually confines to a certain small region only. So say, for example, natural gas, which is extracted within Malaysia, at most it will be supported to the neighboring countries. So say, for example, Singapore, I think also Thailand as well. They have a network going up to north into Thailand as well. So it's not something that, it can be global. It will only be specific region. So do not expect natural gas players like Petgas to actually go the distance in terms of their geographical uh, breakdown. And but apart from that, if you're comfortable with a stable, growing company, PE 15, with a return of equity of around 16%, sorry, and the profit margin is quite good lah for an infrastructure stable kind of company, and the dividend is a little bit kind of predictable, judging no significant bad impact to their business model. So all in all, this is a very stable kind of company, and you would not actually expect it to grow by a lot, but it's going to be a very stable kind of potential income play. If you're someone who dislike risk, someone who dislike fluctuations too much, then take a deeper look into Petronas gas. So it could be a good candidate if you actually dig deeper and determine the strengths or even the weaknesses of the company. And of course, if you see the share price movement, it has been relatively stable. It went up to 19 ringgit, yes, I know. Then it tapered down to around 15 and 16 ringgit, right? So reflect, but still growing a bit at a very slow pace lah. And of course, if I were to run Petronas Gas using Dividend Gems, they will definitely pass hurdle 1 because every fiscal year, there is always a dividend payout from the company. So it really fulfills the criteria of being a potential dividend company. And of course, second part, it also fulfills the second criteria, which we will not divulge here. But for those who have actually attended Dividend Gems, you actually know that this is a company that has passed hurdle 2. Of course, it is a normal kind of business or normal kind of company. We will actually run it through the hurdles, which there are 7 of them. So I will let you know that this actually passes already 4 hurdles. So if you are interested to know more whether Petronas Gas is actually a potential dividend company, does it passes all 7 hurdles, do join us in our upcoming Dividend Gems sharing session. And through the hurdles and the reasoning why we actually set up these hurdles, you actually learn to appreciate and learn to understand whether Petronas Gas Berhad is going to be a good, predictable, and growing kind of dividend company. Of course, for those who are more interested in growth stocks, we also launched Stock Plus in the earlier part of the year. So as of today, it is already up by 11%. So Q1 is over. We are very glad and surprised that the top 10 stock picks that we did for 2021 actually ended up quite well. It has been a very volatile period, but we are actually very satisfied with some companies actually chalking up 30% gain already just in 4 months' time. So if you are still clueless on how to invest for the remaining 3 quarters of 2021, do consider joining us in the 2021 Stock Plus. It will be a separate service as of today, this year, but if you are a premium club next year, it would actually be bundled up, and we look forward to seeing you in our 2022 Stock Plus. And that's about it for today. I hope that it's been a very interesting kind of sharing to you guys. I think this is one of the first infrastructure companies that we covered, and we will head on to the questions.
I think today there isn't any questions, so just to say hello back to Jacob. Thanks for joining us. And then I think we'll stay on for a few more minutes. If there isn't any question, we'll end the session, but also give a little bit of preview on what we are going to cover next week. We are thinking to cover some of the new IPO that's coming up very soon. But of course, we're still picking and debating whether to do that or not. So if you can guess, then you can make a guess which IPO stock that we're going to talk about. I think there's one question coming in. Any other utilities company in Bursa that you guys are interested in?
I think there isn't a lot of utility companies in Malaysia, right? So we talk about pet gas, natural gas. We also have some companies like Tenaga. You also have companies like, I would say TM is considered infrastructure as well. Yeah, right. I really, okay, compared to TM and also Tenaga, I think Petronas is more attractive because it's more predictable. Now, sometimes you can see Tenaga and TM, right? Sometimes during certain quarters or certain fiscal years, there will be a one-off kind of depreciation, write-off, one-off loss. This kind of unexpected results actually eating or impacting their performances. And even though these kind of results sometimes might not be it's just an accounting loss, right? You have to book the loss once it's recognized, but it will pull down the company performance, and then it will also fluctuate and impact the share price quite a bit as well. So for someone who favors or prefers a company which is more predictable in terms of how the business is being run, I would say if you ask me to choose, I would prefer Petronas gas compared to Tenaga and also TM. But I don't know what about you lah. What about you? What are your thoughts, Junbing? Do you actually consider all infrastructure companies the same, or is there some kind of advantage some companies might have?
I think when you talk about company that is common enough that you will be using, usually the one that is less well known, probably the one that is more stable. Since it doesn't make a lot of headline, everything is just so stable. Then maybe Petronas gas is one of it. TM is facing a lot of challenges from different competitors. When they wanted to move from their core offering, internet, voice, but then when they wanted to move on to mobile voice, they failed. Even though now they got unified mobile, those things, they really can't really crack that space. So there's a common, there's a very obvious thing that they cannot crack. When I talk about Tenaga, it's quite seasonal, but if you manage to always catch the right dip, then maybe you are at the very good position on reaping the dividends. But they always on and off, go up, then go down a lot for no reason, then go up again. Very hard to predict. And so unless you are really aiming for the dividends for long term, then just when they go low enough, just can accumulate. But don't expect to get a lot of capital gains. And it's kind of similar go to Petronas gas as well. The one that you see that we shared just now go up to 19, all those things is probably linked to some of the news that say it will have a new tariff coming in. Then people, making the headline, going to buy, but then end up didn't announce, and going down again. So this is some drawback lah. You can't really have a lot of capital gains even for long term basis. But TM probably slightly different because they can be very, very different if you talk about laying out the 5G backbone facilities. But a lot of things still unknown. So not a lot of choice in Malaysia. But it's very stable. Won't have a lot of surprise.
So yeah, I think that's the kind of expectation if you are someone who wants to invest in infrastructure company. Just take note that to build infrastructure and then to provide people certain service and certain products, because you have the technical know-how, you already have the existing network or infrastructure, it costs money. And sometimes if some part of a project or whatsoever upgrade, it does not comes to, does not materialize, does not actually play an important role, then sometimes you come out and see news like company have to actually recognize a one-off loss, and then write off, impairment, all these kind of accounting words that you would actually notice or read through when you actually follow or go back to the previous quarters of, say, for example, companies like Tenaga and also TM. So when that happens, you just have to, what to do. Like, you cannot predict or cannot anticipate one-off losses, which being booked by companies that are operating in the infrastructure business lah. So just take note that this is the kind of risk, and that kind of negative headlines will definitely jolt the share price a bit, maybe not to your favor. So take everything with a package. I know infrastructure companies can be decent dividend players, but you have to really think from that angle as well. What if the impairment and one-off losses does not get contained, and is not controlled well enough, then the negative capital losses will actually eat into the dividends, and net up, you actually are not actually gaining on your investments, right? So that is just something we wanted to maybe share with you guys, particularly not just for podcast, but also for infrastructure related companies. So if there isn't any other questions, then we actually stop the show right here. And of course, thank you for tuning in every week to listen to our sharing and also contribute to your questions. And we hope that we are able to answer your questions as well. As for next week, Chun Beng actually hinted that we might be covering another IPO company in the Malaysian market. Do stay tuned. If you know what we are going to cover, then stay tuned for next week. But if you do not know, do join us next Thursday as we actually potentially cover another special company that's going to list in our Malaysia Stock Exchange. And hope that is going to be a good episode for our Not So Late Night show. But apart from that, we thank you for your attendance today. Have a good evening. Have a great weekend upcoming. And we'll see you next week. Take care. Bye-bye.